All right, everybody, thank you for joining in the Talking Hidden Treasures panel, Mexico and South America. We have some very distinguished guests here that are going to be joining the panel. We have David Stein from Kuya Silver, Lauren Megaw representing Reyna Silver, Michael Curlook representing MAG Silver, and Jorge Ganoza for Fortuna Silver. Thank you for all the guests on the panel and being here. For those of you grabbing food, we're going to go ahead and get started, and we're going to have this as you guys eat. We'll have some discussion on the panel, and then we'll open it up for some questions you guys may have. And my understanding of Talking Hidden Treasures really is to discuss how these guys found what they found, what was the process, and really illuminate sort of how this process works. And I think for me and for a lot of people that follow us at goldsilverpros.com is really understanding in the mining sector kind of how it works, how you do the discovery, how you find the resources. I feel like people really know how to invest in it, but maybe they don't understand, what you guys go through in order to find those deposits, to develop those deposits. It really is a very long and lengthy process. So I want to go ahead and get started with David at Kuya Silver. So if you could just take a few moments, share a little bit about your company, how you guys found what you found, and a little bit about your origins. Thank you.
How much time do I have? 4 or 5 minutes. Okay, thanks everyone. So I'm David Stein. I'm the president, CEO, and one of the founders of Kuya Silver. So our company started with a project in Peru that we got into a joint venture when we were private back in 2017. So we are relatively new company. And I guess, in order to talk about the origins of the company, I have to talk about myself for a bit, which is always fun. So I've been in basically the precious metals financial business for 20-ish years now. And, I started as an analyst, for a Bay Street firm, and I did that for sort of the first half of my career. And then I've been doing other, sort of investment related jobs and roles since then. And, so I figure I've, over the years, I've learned what works and what doesn't work. But always I've been involved with precious metals in some way, shape, or form. And, one thing that I saw early on in my career, and, I have to, I guess I'm going to steal a little bit of limelight from the gentleman to my left here, is when I was an analyst, I was picking up coverage of companies that had one high grade silver mine in places like Peru and Mexico, First Majestic, Fortuna Silver, etc. And it was this was around 2004, 5, 6 in that kind of time frame, and I saw these companies grow, be successful. Some of them were taken over. And, it's something that I think has been a little bit of a business model that's been lost in the last, 10 years or so. Everyone's, it's been a very tough market, of course. There are still, I felt when I went out on my own and started looking for projects to invest in myself back around 2016, 17, I felt like there were these, sort of undiscovered gems still out there, privately held, or maybe spin-offs of other public companies. And really that's what I was looking for. And, I was working with a gentleman who I had met when he was with Kinross, Christian Aramayo, who's now our COO. He's a Peruvian, lives in Lima. And together we were looking at projects in Brazil, Colombia, Peru, and we ended up finding this Bethania project, which was a really great high-grade mine that had fallen on some hard times. It was owned by a private family, father and a daughter, owned all the shares in the company. And they made money when silver prices were high, toll milling this high-grade ore. And then when prices started falling, they had a little bit of debts and liabilities that they couldn't handle, and sooner or later it was in care and maintenance. But they never really did any exploration. That's a common kind of theme when you look at these private high-grade silver mines. They never did any real exploration. They in their case, they never had a mill. so they couldn't sort of control their own production. So when we did a deal to initially to do a joint venture with them, the plan was to build a mill there, produce this high grade silver concentrate there, as well as zinc and copper, and then and lead, and then continue to do some exploration, because these veins that they were mining and following just continue to go along strike and a depth deeper, and they're hardly scratching the surface of this hill that they were mining. So that was really the idea. It looked like a great way to start a company, and really our thoughts over the last 4 or 5 years have been proven right. We've been able to do some exploration. We've increased the size of the deposit. It's still open in all directions. We've been able to permit in Peru, so we got a mill permitted. We've calculated our first ever resource earlier this year. So we've really been sort of ticking the boxes and de-risking them. We took the company public, I should have mentioned, in 2020, so right in the middle of the pandemic. Without any in-person meetings, we were able to raise about $9 million and take the company public. We ended up buying out the owners, $13 million. We ended up buying out the owners completely, so we own 100% of the mine. And that's really our story in Peru. We've been continuing to de-risk the project, and it's been a very tough silver market. But our project isn't that sensitive to silver prices, because it's a low cost, high grade silver project. But we are very sensitive to the capital markets, and it's been very tough with the share prices and the lack of interest in our sector. But when it gets better, I think we've got a winning project here, and I'm very, very excited to see it grow into the next Fortuna.
Thank you, I appreciate that. So I did have a question for you. One of the things I always wanted to know is, what is the biggest challenge if you're starting off with a new exploration or new project? What's the biggest challenge getting that off the ground and moving it to where investors may be interested in you?
Look, I think in general, the biggest risk that we have in our sector now, and probably for the last 10 years, has been financing risk. So, whether you do an exploration project or a development project, you always need to have sources of capital, and you want to obviously be able to do it without continually diluting shareholders. So I think that's the biggest challenge and risk for our sector. And yes, there's jurisdictional risk in different countries and states and provinces, and there's obviously, the earlier your project is, the more exploration risk there is. But for an advanced stage project like ours, I think it's financial.
Thank you very much, and I'm going to follow up with another question for Jorge here in a moment after you talk about your origin story about getting that from the initial stages further on. But Jorge, if you wouldn't mind, talk a little bit about Fortuna and how that project got started, and a little bit of the history of it, if you wouldn't mind.
Sure. Fortuna is an 18-year-old company by now, and it's a company 2 associates and I co-founded. Yes, David was the first analyst to pick up coverage when there was only 3 of us, no money and big ideas. So I do remember those days. Today we're a company with a global footprint. We operate in 5 countries, 2 continents. Our gold production on a gold equivalent basis is around 400,000 ounces annually and growing. 20% of our revenue comes from silver, 70% from gold. And we have about 10% byproduct, lead and zinc. We're a low-cost producer. And our focus in growing the business has been simple in a way. The difficult part is the execution, but conceptually, quality of assets, mining jurisdictions, and try to get the best people we can, right? So the 3 basic concepts that, the trick is in the execution. For us, mining is and has always been a frontier business. You have to be willing to go where the assets are, right? So, we're spread between West Africa and Latin America, from Mexico all the way down to Argentina. And we're comfortable with that, because even though some of these places might sound remote and politically unstable, they all have something in common. They all support their mining industries. All of these countries have a long track record of supporting the development of responsible mining. Yes, we might have to deal with the eventual coup every now and then, but in spite of that, they continue supporting mining. And again, our view is that mining is a frontier business, has always been. Being here in the, just a fun fact, for example, I don't know if many of you know this, but the largest gold producer in the world is China. 380 tons of gold annually, 370 tons of gold annually. The second one is, if I'm not mistaken right now, Russia. Then you have countries like Canada, the US. They're all continental nations, right? If you group the gold production coming out of a small country like Ghana, Burkina Faso, Ivory Coast, the gold producing region of Mali and Guinea, if you group that geography is the size of the state of Texas. And that geography produces more gold than China or the US or whatever. It's the largest gold producer in the world. That small geography. So last year we expanded there, right? And we're currently producing from one mine, and we're 70% complete with the construction of our second mine. It's a place where you can build effectively. We're on time, on budget. 70% complete with the construction of our Séguéla mine, which will be a low-cost producer, under $1,000 per ounce, all-in sustaining, with a reserve life of 10 years plus. So, if you want to call us adventurous, you can, but we'll go where the gold is, and a place where you can effectively develop mines. As an example, Séguéla in the Ivory Coast, the project I'm talking about, was a 400,000 ounce resource 2.5 years ago. Today is a mine that's 70% complete, with 1 million ounces plus in reserves and growing. There are not many places in the world where you can advance, develop, permit, and go into construction so effectively, right? So we will go where gold is, where we feel welcome, because there are places where there is gold, but miners are not welcomed, right? So we will not force that. We'll try to stay focused on where we're welcome and where the good assets are, and try to put together solid teams. This is a complex business, and success is never on the shoulders of one man. It's really a team effort, right? So that's how we view things.
So thank you for that. And one of the questions I wanted to ask you, Jorge, was, since you guys are producing, I think it's different for an exploration stage company versus a producer. Can you talk about the different types of challenges you face as a producer? Is it different on the financing end? Is there anything different there? Or is it basically just in the operations and management of the company? How is that different for a producer versus exploration stage?
The complete different business, right? As you graduate and you grow your assets, there are two businesses here. There are guys who like to sell things, and I'm fine with that. I love them because I can buy things from them. And there are the guys who like to build things. We are on the camp of the guys who like to build things, right? So we focus on mines that can produce, generating margin. We operate Fortuna with an EBITDA margin of around 40%, 45% at these prices, right? So the exploration business is important for the industry, and again, I like those guys, but it's a business that it's more prone to the challenges of the metal cycle. In Fortuna, what we try to do is put together a company that can perform throughout the precious metals price cycles, right? In fact, in this business, you have to be counter-cyclical. Really, you want to buy assets when no one else is buying assets, and you can buy them cheap, right? But in order to be counter-cyclical, you need to have a business that can thrive not only when prices are high, but also when prices are low. So what we try to provide investors is a good call option, and what do I mean by that? When you buy Fortuna, you're buying a mine that will provide the leverage that you want in the upside, but if that takes a while, or we have to deal with a correction in the meantime, or low prices, your company is going to be profitable and performing, right? So, complete different business, exploration, and the stability that you get if you're operating a multi-asset company with healthy margins. No?
Thank you very much. And next question for Michael with MAG Silver. Just tell us a little bit about how you guys got started. You guys have a really interesting story that I'd love to hear. If you could give us a little bit about how MAG Silver started and where you guys are now. Thank you.
Thank you. So MAG Silver is a very interesting story. I've been with the company now for about 9 years. And when I came on with the company, I didn't realize the true value in the company. And following what Jorge says, we had a mandate when we started MAG, of course, before I was there, and that is to identify high grade, high margin, and district scale. And the reason for that, again, follows what Jorge said, and that is to be able to weather 2 market cycles and be able to start when we started, which was when silver was $5 an ounce. So to be able to weather the storms, or to start a company when things are difficult, and be able to go through 2 market cycles as well, which obviously represents a long-term mine. Now, one of the reasons why we went to Mexico is because there are basically 15 silver assets in the world that are over 1 billion ounces. 8 of them are in Mexico, and 4 of them are in the Fresnillo silver trend, and that's where we are. Now, there's no coincidence that we're partnered with a company named Fresnillo. Fresnillo has been mining there for well over 100 years. They have found silver in that region well over 400 years, probably closer to even 500 years. They first found it with, yes, the Spanish conquistadors coming in 1553. So we had these mandates. Our chief geologist, who is not here today, Dr. Peter Megaw, Lauren's father, was supposed to be here, so I'm kind of filling his place, but I don't think I'll ever fill those shoes no matter how long I live. We had this mandate, and he was very, very knowledgeable about Mexico in the first place, and that's why he's continued to look there. Fresnillo did have the property before us. They had released it, and through a lot of series and a very fun story I could digress on, which I won't today, we got the property. We did work on it, and it eventually came into MAG, and on our first drill hole, we were very, very successful, and we hit mineralization. 16 holes later, and that was in 2003. In 2005, 16 holes later, we hit the Valdecanas vein, which basically represents about 90 to 95% of the value of the company today. It's taken a long time. Mining does take a long time. That was 2003. Next year is 2023. So you do the math. But we're there now. We've built our plant. We completed it in January of this year. We're waiting for our electrical tie-in. And in the meantime, MAG is producing. What we're doing is we're taking that mineralized material from the mine and we're putting it through Fresnillo's plants. They have some extra capacity in their plants, so we're generating income right now and cash flow for the project as we go forward. So it's a little unusual situation, because usually when you're in a situation, you're consuming cash and it's going out the door and you're not producing anything, so it puts a threat on your balance sheet. Our balance sheet is very strong right now. We have $45 million in the bank, US. The Mexican entity that is comprised of both Fresnillo and MAG has $37 million in the bank, and it's growing with each quarter. This past quarter, we actually generated $37 million, and we produced 2.4 million ounces of silver at a head grade of 567 grams per ton silver, not silver equivalent, but silver. So we're very, very fortunate. We have one of the most significant silver assets out there. It's long mine life. At this time, it's 19 and a half years, and it's very, very exciting to be part of. Now, as I said, there are these 15 different assets, and where we are is in the Fresnillo Silver District. That district wasn't always the preeminent area for silver in the world. Originally, or historically, I should say, it was in Bolivia, Cerro Rico de Bolivia, and they produced and have approximately 2.8 billion ounces of silver. If you total the historical production, the current resources and reserves of Fresnillo and MAG, you're looking in the neighborhood now of 3.3 million ounces, and we're just at the beginning. Our property, which is significant, no doubt, we've only explored 5% of our property, and we have this very, very significant asset. So we believe there's more potential. Actually, Peter believes there's more potential, and I believe Peter. So we're going to continue to look on our property, but that is one of the reasons why we started in Mexico, why we think Mexico is a very good asset, and where we are with MAG right now. Thanks. Do you want to pass?
So a good follow-up question for you, and I love your project, by the way. If you could explain to the audience, and this is the question I get the most, which I think maybe potentially for investors is the area in which they know the least. How long does it take, and what is the effort level that it takes from you have a kernel of something to developing a project like you guys have now? Talk maybe a little bit about the investment side of it and also the development side of it. These projects often can take many, many years to develop and reach fruition. And so I think the mining sector, it takes a little bit of time, but investors getting in early, of course, can be rewarded. But maybe just explain how long it has taken you to develop this project and why investors would want to be in that story for that long.
Thank you. Well, it is a long go, and I'm glad I'm sitting beside Jorge, because he likes us kind of guys, because we find stuff, and we like to find stuff. But when you first get that property that you're wishing or hoping that something is going to be found, there's a thing, or there's a curve known as the Lassonde curve. And what it represents is the opportunity in the industry to be successful in mining. And so you get your property and you're here basically on the Lassonde curve, and you start exploring. Now, a lot of guys get nowhere because, as you're mentioning, they run out of money. They explore and they explore and they run out of money. MAG, we were very fortunate. I mean, it doesn't happen. First of all, we hit on our first drill hole. How many times that'll happen in my life again? Probably zero. And I wasn't even there in the beginning. So anyhow, you hit something and everyone gets very excited. And there are companies doing that today. And that's what keeps our business going, makes it exciting. It brings investors in. You follow that up and you get to a point where investors are happy with the amount of money they've made. So they start selling. Also at that time, it's when you've had enough time to realize the size of your deposit, and you have to then start calling in the engineers, the guys who make it happen. You found it with the geologists, and now you go through a period which is not that exciting to investors. It takes time, it takes money, you start financing, you start slight dilution in your stock, and there isn't a lot of excitement. So you go down, you start heading back down in that Lassonde curve. Then you go through that whole process, it takes time, and you start to then, just before you get into production, you're ready, you've financed it, you're just going and you start producing. Then the whole curve starts again. And this is the exciting part for producers. The gentleman, like people like Jorge, who have taken that time and that investment, and finding the people, finding the money, putting it all together, and making it work. And that is not an easy thing to do. But when he's successful, you start rising again. That's also the point right now where MAG, as we're just about to start production, we are producing through the through Fresnel and their plants, but we're not using our own mill yet. We're going to get to that. And then after a time, you level off, and then you create that curve again. You find another property, it goes up. You can either buy it like Jorge does, or he can find it as well. And then he creates value, he grows through the development period, and then he raises his company, and that's how you create value in mining, and that's how it goes together. Okay? Should I pass it back over to Lauren? Okay.
So I guess I'll take it off and introduce Reyna Silver. Those of you may have been originally expecting to see my father. He's a much larger Megaw. I at least have better hair, and by that I mean I have hair. I don't have the experience that he has, obviously. Not old enough for that. But I can speak a little bit to the philosophy behind why we're in Mexico and why we're doing the style of exploration that we're doing at Reyna Silver. The same style of exploration that they did at MAG Silver, and that's how you find something that really makes a serious dent in the market and provides extreme value for investors. And the belief behind Reyna Silver is that if you go after something that's high grade, if you go after something that's big, you have that, as Michael was saying, that long-term mine life, surviving multiple market cycles, high enough grade that you can make money when silver's at your worst possible nightmare, and then you can party all night when silver's at whatever dreams are made out of, right? And so the question becomes, where do you go exploring for something like that? And part of the reason for going after Mexico is because of market cycles, timing, political, economic. Mexico, in a lot of ways, is not a matured exploration area. There's a lot of potential there, and a large part of that is due to the fact that about 50% of Mexico is covered by young volcanics and alluvium, so blind targets. You have some of the largest silver deposits in the world, one of the largest silver belts in the world. And a lot of that was discovered in outcrop. They found it back with the Spanish looking for gold, and they found silver, and they chased it. And they came in repeatedly with different technologies, high grading the same deposit again and again. And then in the 1960s, you have a situation where it became required for mining companies to be majority owned by a Mexican company. So a lot of the resources, a lot of the money left the space. And we're talking about the same time as plate tectonics became an accepted idea. And as you have a situation where exploration is de-emphasized in Mexico, you have a lot of movement going on in terms of modernizing exploration techniques. Realistically, in the 90s, that started picking up again in Mexico, and then BRIEX happened. And about the time when people were starting to get money back in, they were starting to explore again in Mexico, 2003, you have projects like MAG Silver that came on board with the idea of, rather than going in to an old district again, what happens if we look for how much bigger these systems can be, similar to what's being done elsewhere in the world? And they did that at Juanicipio, and they found something monstrous. And so at Reyna Silver, our idea is, Well, we've got 2 projects that were part of the initial IPO with MAG. We think that one of them's part of Mexico's highest grade silver district. It was a native silver district. Our question is, how much bigger does this thing get? We went outside of the historic district, and not only did we find more native silver, but we've also found gold, which was never seen before in the district. Our other project in Mexico, Gigi, is at the heart of the Santa Eulalia district. We're talking the district that is the reason why Chihuahua City exists. It produced 500 million ounces of silver. And from what we know, studying carbonate replacement deposits worldwide, that 500 million ounces of silver came from just the distal portion of the system. The source, the heart of the system, hasn't been found. And so the possibilities there of looking undercover, of seeing what we can take that modern exploration techniques, maybe we can find out how much bigger these monsters are. And hopefully, Reyna Silver can do something similar to what MAG Silver did. That's the dream, right?
Thanks for being patient as we pass the mic. So I had a question for you. I'm more interested in how you got interested in geology and sort of your own story, because I think what's different about you and why I love to have you at my conferences and on stage is you represent a different generation and a different way of looking at things. And I think in many ways you're going to attract younger people into the space, which is why I think it's so important. So if you could talk a little bit about how you got interested in it and a little bit of your own origin story in becoming a young geologist. Thank you.
So I was lucky enough to grow up in a household that we could say is a little bit geology crazy. My dad would come home from being in the field with a shoebox of mineral specimens. And after dinner, we would sit down and they get wrapped up in toilet paper and we'd unwrap them. And we'd talk about the geochemistry and the deposits they came from and what we can see from the mineral specimens, what they tell us about the type of system that produced something like that. And then you go and you look at mineral specimens worldwide, and you realize that carbonate replacement deposits produce some of the most beautiful mineral specimens out there. The geochemistry is interesting. That took me off to Stanford because I thought, I want to be a mineralogist. And then I discovered that what I loved about the minerals is what they tell you about the system they come from. And that took me down a rabbit hole. That took me to China for a little bit, looking at carbonate replacement deposits. And last year, after looking at Medicine Springs in 2020, which is one of the Reyna Silver assets with my dad, did a little work on that. Our CEO, Jorge, called us up and said, hey, I need someone to help me with this silver conference up in Coeur d'Alene. Do you know someone? And my dad went, Lauren should know the story about this. Kind of grew up with it. And so this was actually the first time I went to worked a conference out here. It was actually the Silver Symposium last year. And I think that there is something beautiful about this space. We need mining. If you don't grow it, you've got to mine it. And the question is, how do you connect to people to explain, where their phone came from, where the next big thing comes from, and how can we teach people about these deposits to take away a little bit of the translation issues we run into? Because let's be honest, geology is a little complicated. We want to use big fancy words so that everyone doesn't think we're out there licking rocks, right? We got to use some fancy language. So how do we make that approachable? So that people can make the right investing decisions? It's hard to be confident in what you're investing in if you don't know what's going on with the deposit type. And so I'm hoping that myself and other young people that are coming up in this space can translate and help bring some new people on board. I mean, people got really into crypto mining. I have a personal opinion that I like to have something physically coming out when I mine it. So hopefully other people my age will eventually get in and like the same stuff.
All right, so I have a question for the panel, and it goes to, I think, what the purpose of this is for, and what the purpose of the conference is for, and what the purpose of us all meeting together for, is getting into the space and discovering the space. It seems as though with this current generation, it hasn't resonated as much with them. Commodities and resources and precious metals and mining is not quite a big a focus for the younger generations, I would say millennials and Gen Zers. And any of you guys want to talk about this, how do you appeal to that new generation, and from not only from an investment perspective, but getting people interested in it? Are there changes that need to occur in the industry? Are there changes that are going on? Have you guys had any challenges with that? If one of you could talk about that for a moment.
Sure. I'll start. I feel like I haven't said anything in quite a while. Actually, you know, what's going on right now kind of reminds me a bit of how the industry was when I was in university. You know, just I guess in the late 90s. That was a very bad time for the mining industry, very low point for the mining industry as well. And you know, I was going to a very you know, highly regarded engineering school with you know, that had a geological engineering program. And a mining department as well. And in my stream, which was mineral exploration, we had 3 students. You know, so that was class of '98. There were 3 of us, and I don't think any of us all are in the field now. Any of the 3 of us, as it turned out, but. You know, so part of it is just, unfortunately, the cycles that we can't control play into, you know, the generations and who's interested. Because, you know, at the end of the day, people want to be in a sector that's successful and that they can make money and they can advance their career. And it's tough to do that when, you know, when you're in a secular low. And I bet you if you went 10 years later, the mining enrollment in university was a lot higher, and it was. However, the other thing you need to do is you need to kind of keep up with the times, and I think there's very, very interesting things going on in our sector now with technology and applying a lot of, you know, applying a lot of, you know, communication and drone technology to, you know, to what you can do, whether it's at a working mine or whether it's in the mineral exploration stage. And I think the ESG angle is really important too to attract young people, because you know the younger generation cares a lot about ESG, and as they should. It's their world they're inheriting, and so things like, you know, electrification of site and a lot of the technologies to save and generate your own energy at site, because mining can be an energy intensive business depending on you know, on what your sort of layout and process is, and you can be in the middle of nowhere as well, where you know you need to find some kind of source of energy. So I think those things are all, and there's good things happening there as well. But you know, but it needs to keep going. It needs to happen, and you know, hopefully it will.
So follow-up question for you, Jorge. As a miner, what technology are you employing that would make it easier to mine, also may attract some young people to the space that are interested in that?
Yeah, but I would like to elaborate a bit more on the previous question, if you allow me. Okay. I am a 4th generation miner. My great-grandfather, my grandfather, my father, myself. We are 4 brothers. 3 out of 4 are in industry. And I have 11 nephews, and 2 of my daughters are thinking about going into geology. So I think that as we have become more of an urban society, you know, the sector has become less appealing to the younger generation. The fact is that you really need to have a passion for this, because you have to be prepared to spend 2/3 of your life in a mining camp or away in what traditionally are remote locations. No, mines are usually remote places, and you might have, you know, when you go to the field, you cannot be counting the days as if you're doing time, right? You need to want to be there, and again, as society in general becomes more urban, I think it's difficult to find, the young ones willing to do that, no? And I see it at my house, at home. The only positive one there at home is that when prices were down, which was usually difficult to borrow money from your brother or your father, right? Now if we had a bit more dispersion, is better. But I think it's a demanding profession, and you really need to have a passion for it, because it's challenging in that way, right? We find, for example, with the use of technology, going back to your question, I find that really smart guys who study mining and using the new softwares for resource estimation and reserve estimation that we have, and you find a lot of young guys. I find a lot of bright young guys who become quite capable in using these technologies, and they become senior mine planners, and they have never been more than 2 years at a mine. But because of the use of the tools, they become senior mine planners, and they're working at an office in Toronto or Vancouver, and I think that's a danger, perhaps. You're losing, those guys who spent 30 years, 20 years, 25 years doing it every day out there in the field. So I see a challenge there for the industry as a whole.
So follow-up question to that for Michael. If you could explain how MAG is utilizing certain types of technology for your deposit, maybe how that's different than it was, say, 10 or 20 years ago, if you don't mind.
Well, at MAG, what we're doing, we've adopted a drilling technique that we took from the oil industry. So we're doing directional drilling, which was not common in Mexico, and we're employing it where we are in Mexico at Juanicipio, and that's proving to be successful. Now, it doesn't necessarily save you money, but what it does, in certain ways it does, but it's not as if that's the idea. The idea behind directional drilling is it allows you to pinpoint where you actually want to drill. Because if you're drilling a kilometer down, the likelihood that you're going to intersect where you want to intersect is very difficult. The rock can be different consistencies on its way down, so it will deflect the drill point one way or another. What you do with directional drilling is you have a big mother hole that goes down, let's say three quarters of the way. And then when you get down to that area, then you have daughter holes that you go off, and they're very, as I said, more pinpoint accurate. So that ultimately can save you money, but really from a geological point of view, it helps you be more accurate and be more efficient. And the cost savings is it's there because you don't have to sink. If you're going to sink 6 holes that are a kilometer long, you ultimately sink one that is 3/4 and a bunch of small ones. The other thing that we're doing is at Deer Trail is we've used some sonic percussion in our exploration there to identify and understand the geology, not necessarily to locate anything, but for us to understand where the potential of drilling will be better as we go forward. So we're using technology. It's hard to find technology because, a lot of these systems, like if you're looking in a plant, a lot of the systems, what they figured out years ago is very, very good. You can optimize it. You can make it a little better, but new technology in some of the processes involved in mining is a difficult thing. In geology, there is potential, and they continue to try and find more.
All right, last question for me, and then I think we're going to do a bit of Q&A because I know you guys are going to have questions over all their projects, and we can get pretty detailed in that. The question for Lauren is, as you went through school, how has the teaching method changed, in terms of how they're teaching young geologists now versus the way they did it before? Is it technology-based, or what has changed, do you think, in the industry the last couple of years?
So the school I went to is perhaps not the best example of how things have changed. I went to Stanford. We had the combination of, when I was there, the School of Earth came online, and a program called Earth Systems, which was a Bachelor of Science focused on environmental and policy-based sustainability, came online. So my first year, there were 17 geology majors, and by the time I was in senior seminar, there were 3 of us. So that happened. However, I will also say that over the time period that I've been coming online, there are some serious young geologists that are coming up. 2017, I was on a copper porphyry field trip in Chile. There were 6 young geologists and 20 some odd more mature, established geologists, we'll say that. And this last year, I was on a Carlin field trip in Nevada, and I think there were 8 mature geologists out of 40. And there was a lot of young people who are on projects, they're in the field, they're out there. And I think that perhaps they're not in this space yet, but they'll be here. And we also have younger people in the space that are coming up that are here. You've got someone like Galen or Peter that are here at the conference, and they're there representing their companies. And I see this as a corollary with an organization that I co-founded called the Young Mineral Collectors. Everyone said there's no one in the mineral collecting community that's under 40. So I started a Facebook group to see how many people there were, and now there's about 1,200 people in that group that are serious mineral collectors. So I think it's not an aspect of these people not existing. I think it's that the 2 worlds haven't merged, and that's going to be the big question, is how we bring those in together. I think there's an aspect too that the Canadian, the Australian systems in terms of, and Mexico has a fantastic geology programs through their universities. I think the US has slid on that a lot, but I don't think that's to say that there aren't people coming online, and they're going to be bringing new ideas into how to approach these deposits. I think you're going to see an emphasis on high grade.
So any questions for the panel up here? We have represented Kuya Silver, Reyna Silver, MAG Silver, and Fortuna Silver. We're silver heavy for this one. Yes, David, I'll come down and bring the mic to you. Okay, so the question for the recording, for those who may not have heard, he was asking about mining, robotics, and explosives, and how that's developed and how that's managed. So, anyone?
Okay, let me just, before I get there, let me just sort of jump off of something that Lauren just kind of ended with, which is about the emphasis on high grade, because that will sort of get into that as well. Because one thing I've definitely sensed in my analysis and being part of this industry in the last I would say 5 to 10 years especially, is how important the ESG story is. And there's no question, whatever you think about that, there's no question that an underground mine has a much smaller footprint than a big open pit mine. And for most of my career, going back to when I was in university in the 90s, the emphasis on mining was really how to do it bigger and cheaper per ton, and so that drove a lot of innovation in open pit mining to make things bigger, cheaper per ton, and you end up with these big multi-billion-dollar mines. And for certain commodities that just can't change. Like you're very unlikely to have a small high-grade iron ore mine or a small high-grade copper mine nowadays, because you need that scale. But I think for some commodities like gold and silver, you can mine these narrow high-grade veins and have a much smaller footprint. And obviously, if there's gold at surface or there's silver at surface, you're going to mine it in an open pit, of course. But there's no question there is an advantage, or there is some advantage to these underground mines and be able to do it. And basically, it's almost like you can leave no footprint on top, especially if you're in a forested area. There's some amazing examples of this where, people are mining underground and you wouldn't even know they're there. So, I guess the next step to take that even further is to have, fewer people underground. Some of the bigger companies have already been sort of experimenting and doing R&D with robotic mining for a while. And like guys like Glencore and Falconbridge or Vale, et cetera. And frankly, they're the ones who have to do it because they have the ability to experiment. Junior companies can't experiment. We can't be the first guy to do, robotic mining because the market just won't fund that, right? But, Glencore can work on this as a side project for 5 or 10 years. No one will ever know. And then boom, one day, hey, we can mine underground in Sudbury, 1 kilometer underground. There's no humans. Cameco's doing it in uranium in Saskatchewan. So it is something that is coming and small, and that also allows you to make the equipment smaller as well, right? If you don't have to have a human in a machine to drive it, you can actually make the equipment smaller, and you can fit it in narrower stopes as well. So that's something that you're going to see as well, both for like narrow, flat deposits like in South Africa, those flat, narrow reef deposits, and then also in narrow, high-grade veins as well, all over the world.
Great. Any follow-up to that from any of the other panelists?
I see slow movement. I really, using technology, really the last big transformation we saw in this industry was in the 70s with heap leaching. No, that allowed us to mine 1 gram, 2 gram deposits, and today 0.5 gram or whatnot. And after that has been small incremental gains on productivity so I do see the big mines now going with automated fleets and things. We're incorporating more and more automation on the fleet for underground. Yeah, absolutely. We're reducing risks for people, for example, in securing the back of the drifts with fully automated equipment and whatnot. But if I want to single one area where I think the leap over the last 10 years has been more important in relative terms is the use of technology for resource estimation. We're using today in our laptops tools that 10 years ago or 15 years ago, only the oil industry could use. No, today our ability to use technology to model ore bodies and there we've seen a significant increase in capability that is being used to help reduce the risk, the variability of our deposits. No, and we're seeing that more and more. No, before, or resource estimations that led to reserve estimations that led to budgets and guidances were all plus minus 30% because the ore bodies are changing and grade moves around. And no, today we have much more tighter control on all of that. And what the change we've seen over the last decade on that end, I think is the more important one, and perhaps the less palpable one, right? Because it's the softwares that you can use today and are more readily available. But the ability to properly model geologically, geostatistically is significant to what we seen 15 years ago. Absolutely.
Any other questions for any of the four companies up here from anybody in the audience? Yes, Laura, let me bring this down to you. Okay, so to restate that question for people maybe watching the video later, Laura was asking about ESG standardization within a country and across countries, and she's seeing more of that go to lawyers and legal processes, maybe necessarily into the mining process itself. Who wants to answer that one?
I know I just spoke a lot, but this is a theme that it's really a headache for us. So we're New York listed, right? Toronto listed and New York listed. So, we do a very comprehensive sustainability report that we publish. That's pretty much standard these days. And then on top of that, we need to have someone dealing with all the letters that we receive from funds and money managers all over the world, each one wanting us to fill their own metrics, right? So the amount of energy and resources deployed to address all of these concerns that go from the Church of England, who threatens the company if we do not adopt the global industry standard for tailings management, to the small fund in Norway who wants us to, fill their own spreadsheet on the metrics that they use. And so, and we refer them to our sustainability reports, and they say, well, that, or we publish a sustainability report like everybody else probably under the GRI, which is the more standard thing, no? And it's really a headache and a distraction. And so, what we try to do is an ESG approach that is very geared towards first understanding, what are the concerns of the stakeholders, a good, assessment there, and then we take it and see what really adds value to the business and helps mitigate risk. Because we get some crazy questions that we don't even bother with, or concerns we don't even bother with. So we try to, stick to the GRI and then get a good mapping of stakeholder concerns, take it back, prioritize according to what management believes and adds value to the business or mitigates risks for the business, and then focus on that. But it's a big effort and a big headache for management, I believe.
I'll follow up with that. Yes, it's very much an infant industry right now, and it's an industry that is trying to find its feet, and at the cost of the mining industry. Mining industry is probably one of the industries that's affected by it most, because people see and can feel the differences of what we're doing. We're going into environments, we're changing the hilltop. Some take a hilltop out. Oh my God, what's that doing? So on a reporting aspect of it, just as Jorge is saying, it's very difficult. And as Laura brought up, what happens is, since it's an infant industry, there's certain metrics that are used, and they're all different by all different agencies, and you're trying to satisfy them all. In fact, I got, as well as exactly what Jorge received, we received to fill out a complete form, and we'd never heard of this shareholder before, because we are held 70% of our shareholders are institutions, so we have a pretty good idea who holds us. Anyhow, these guys asked us to fill out this full form, and I just went, wow, this is really weird. I got to research this. So I researched it, and I phoned them up, and I said, do you own any shares? And they go, yeah, we own one. So there you have these businesses, I don't know what they're doing, but so you come across, and that's an extreme, and I understand that. But on the ESG front, with MAG, we have a particular challenge. We are partnered with a major, so we own 44% of it, and they own 56% of it. They're one of the world's largest primary silver producers. They're great. They're really good with CSR. They've got a good score. They built our operation. They run our operation. So we can't do anything. They do it for us. We can't use their score. Think about that. How does that work? So what happens is they're trying to fit square pegs and round holes, and they haven't got past that. Now, that's an extreme situation because we're in a joint venture with this company, but these are the challenges that have come up for certain companies, where you would think that if the guy who's running it and is doing it for us on our property gets a good score, we can't get his score or a like score, but it doesn't happen that way. So there are, when Laura made that, I did smile because there are a number of challenges. That's just one idiosyncrasy of the challenges. But what happens is there are different agents, rating agencies, they have different forms, and they're, I don't want to sound too extreme, but they are businesses and they are generating income by moving goalposts, and us mining companies having to address those goalposts that they move annually, and in order to do that, we have to engage them to address them.
And to that point, one more. This industry, there's an industry around rating companies on ESG metrics and proxy advisors. And then they rate you, and then they come back to you and say, hey, listen, by the way, if you want to improve your rating, you can engage me because, you know, we'll also do that service for you. So we'll rate you, and then if you pay us, we'll help you improve your rating. I mean, I think that is, yeah.
So I have a comment on that because I used to work in the Big Four. So I worked for Ernst & Young and KPMG, and what they got in trouble for was providing assurance services, but also being the consultant to fix the problem. And we know what happened with Enron and Accenture and that type of thing. So definitely what I just heard, I see like a conflict of interest there. Just wanted to point that out. We've seen that in other industries before.
Lauren?
Oh, yes, you had a question? Sorry.
Yeah, if you were going to say something, I'll take that question afterwards.
I was just going to say that I think ESG is something we're going to have to live with. It's something that's going to become a part of this industry. It's going to become part of everything. I think it's going to hopefully work the kinks out over time based off of what you guys are talking about. I mean, it has to in some ways. But I think what we're also going to see is that ESG is going to move the target in terms of what type of deposits people are going to go after. Because a type of deposit that's got difficulties with ESG is going to make it less economic than the type of deposit that's easier to mine. Higher grade means you get the most goodies per ton of rock that you move. So that's going to be something that people are going to move towards. Polymetallics, same kind of idea. If you go after something where you only get one element, that might actually end up being more difficult long term than something where you get multiple things out of the same ton of rock. So I think we're going to see a shift over time in regards to what type of deposits people are going after. And luckily, I think it also aligns with what's the most economic type of deposit. So that's good at the end of the day for investors as well. So we'll see what happens. You had a question.
Yes. A lot of us here believe that the world economic system is in deep trouble. And it's probably going to fail for you guys in the true sense of the word. You actually mint money. And as a shareholder in some of your companies and stuff, have you discussed the ability of maybe giving warrants to your shareholders who will actually get a physical exchange of the product that you mine?
Me? We are, in our particular case, we're working to provide a sustainable, an asset base that can provide sustainable returns to our shareholders. No? So if you look at how our company has evolved over the years, we've been adding assets with longer lives of mines. The Lindero mine in Argentina, 15 years of reserves. The Séguéla project, which we're building, 10 plus years in reserves. That will allow us to provide sustainability in the returns we provide to our shareholders, right? Fortuna began with rich assets, but with short lives of mines. One of those, the Cayoma mine in Peru, has operated for 500 years, but with 3 years of reserves, no? Which is not rare to find in this type of, vein-type deposits in the Cordillera. But when you have 3 years of reserves, it's difficult to institute ways to return to shareholders, right? So we strategically been migrating towards assets in the portfolio with longer lives of reserves that can provide more predictability and sustainability to the return to shareholders. So in our particular case, it's not a question of if we institute a dividend or a way to return to shareholders, is when, and that when is when we complete the construction of the Séguéla mine mid next year. We already have instituted a share buyback program, so we are buying shares in the market. Particularly at a time like this when we are also undervalued, I believe. And that's a way to return to shareholders. But with respect to more elaborate things, like you're pointing out, no, it's not something that we are considering ourselves. No, we're considering something more traditional in the way of a dividend, but the key is making it sustainable. And to do that in this business, you need reserves, life of reserves.
The question, though, is if there's a devaluation of the monetary system. In other words, my dollar now is worth 10 cents. It actually is worth 3 cents of what it originally was. Is there a way that you could actually give a dividend in metal itself, product itself?
I would say for MAG, probably not. What we were more traditional, and of course we're not giving a dividend yet, but we plan to because of the cash flow that we're going to generate. Investing in silver companies or precious metals companies falls within your realm of what you're talking. It's not exactly the concept that maybe you're hoping that would happen or that a company like ours would institute. But returning value to shareholders is something that we would do. And since we are going to generate excess amounts of cash, we'll be more traditional in our ways. So we'll do probably exactly what Jorge is doing, and that is we'll buy shares back at opportune times to support the market at those low points, and at other times have a sustainable dividend, which again is exactly like Jorge. You don't want to create something for shareholders, be them retail or institutional, that is come and go. You want it to be sustainable. Businesses operate on expectation and standardization of revenue coming in, and you want to complement that by establishing sustainability in your returning value to shareholders, I'd say.
I agree. It would be very difficult to do that. Just the regulatory environment to basically, deliver anything to your shareholders other than dividends is tough. So it would take, it might take someone to basically sort of almost create a new investment product, which is a long, hard road. That being said, I think if I can give a shout out to First Majestic. They do something kind of interesting that is sort of along the lines of what you're saying, which is that they sell their own basically silver branded minted silver products. And so in theory, you could just take your dividends from First Majestic and go into their store and buy First Majestic silver, and I believe they sell it at pretty reasonable premiums. So, I think for the silver guys out there, that's something that certainly, maybe I'd like to see Kuya do one day when we're bigger. We've got, a couple billion of market cap to get before we're probably there in First Majestic's shoes, but, give me time.
Yeah, I have not seen anything instituted like the gentleman is pointing out yet, no? And First Majestic has something that aches to that, but it's not quite like that, yeah.
So there is a company, and this is not made public yet, but I've discussed it with them. They're a silver producer in Mexico, and they're looking, one of the problems with silver producers right now is with the price hovering where it is. You know, we know how silver works. It's very cyclical, and really until gold pops, silver just kind of hovers there for a while. At the rate that silver is right now, it's not terribly profitable for a lot of primary silver mines to make money. And so one of the companies, as they're building their mine, and they're going to start producing here pretty soon, is interested in doing is using a financialization structure where they take that actual resource that they have and they offer like options for people to invest in that so that they keep their silver and they can monetize that silver when they want to, but it allows them the ability for the people that like that company to take options on their silver and help the company out, but also speculate a little bit. So it's a little bit of financialization, but it's financialization within a specific company, not on a big exchange. And so every company there could offer that product if they wanted to. So I do think that we're going to see some additional tools coming into the resource space that maybe have existed in other places, like in technology and like in staples and like in those types of things that mining may not have seen yet. And I think some of the miners are actually starting to take control. So look for some of those solutions to come out to help those miners better navigate the cost pressures that we have during the down cycle and things like that to allow them to continue, you know, to finance out their production. The other piece I would say is you have the royalty and streaming model. That may be more accretive to the royalty and streaming companies than it necessarily is to the miners. But, and you guys can correct me if I'm wrong because you know this better than I do, but my impression of that was they came about because due to some financing challenges that the royalty companies provide a service to the miners that they wouldn't maybe necessarily be able to get out in the marketplace. And it's more of a traditional model, more of a traditional financial model. But I think we're going to see some more advanced financial models start to work their way, you know, into that space so that the companies have a little bit more management over their costs and their profit levels for this when we're, you know, like I said, when we're not in the up part of the cycle, which tends to happen a lot with the precious metals specifically. Any other questions from the crowd? I think we have time for one more and then we'll go ahead and wrap it up. Yes, sir.
Is there an association or an entity, because I hear a common denominator of issues that all the miners are facing, the varying standards, what have you, and local jurisdiction to jurisdiction, that's somewhat challenging. Is there an association of miners, mining, what have you, that is actually lobbying for the industry to come up with set standardization?
I'll let the experts answer that question. I know there's a World Gold Council which does some things for promotion, commercials, informational that a lot of the miners are involved with, but I'll let these guys answer for what maybe some of the other solutions are.
You want to answer that?
Me again? I think the best one probably is the ICMM, no? Particularly on the matter, complex matter, for example, of tailings management, which is, they have come up with this, you know, global standard that, you know, kind of everybody is adopting, and stakeholders are also referring to that, and companies are merging towards that, right? It's still, the adoption is voluntary, right? But we're all going to ICMM for guidance, and you know, they are the technical body producing the standard and whatnot. But I think it's a bit by subject, right? Yeah, that's what I see. I don't know if. Go ahead.
I just wanted to mention that there's a man, excuse me, by the name of Jamie Strauss. He's out of London, and he's been really doing this as a labor of love. I've been helping him a little bit on it pertaining to ESG, and he was able to speak at the G7 on this. And if anybody, it's worthwhile to contact him for anybody who's interested in regard to mining and ESG.
And it's not just mining. There is a big push right now, for example, with respect to also how to deal with the proxy advisors, right? I think there is a big movement by not just mining industry, but I think even the NYSE is taking some action to try to lobby to bring the proxy advisors into some sort of line, right? Because what happens with those guys is also kind of crazy.
Thank you, everybody, for joining. I'd like to thank our hosts and our panel participants very graciously for being here. Thank you, guys. Chenlin's going to be over here on the main stage, and Fortuna Silver here in 15 minutes. Thank you.